Good morning, everybody. Hey, welcome to Thursday, March 12th. Hey, welcome to a rough week and a rough start to March as we continue to look at the coronavirus and what it's doing and the havoc it's causing. Dave and I will have, I'm sure, a great conversation around that. But before we start, let me remind you that it's never too late to get a risk analysis of your current portfolio. A matter of fact, I'd even argue that now is more important than ever to get that risk analysis done on your current portfolio. Give us a call. Let us walk you through that process so you know where you're at and what you're looking for. 863-382-0037. That's 863-382-0037. Hey, Dave will be with us here in just a few moments. Stand by.
5.7 Light FM, Glenn Fry. It's time for our daily epidemiology report. Hey, we talk money, but since it's all epidemiology, we might as well just rename the feature, right? How is Wall Street doing this morning? Well, I'll give you a little bit of a teaser on it. It sucks, just kind of like yesterday did. Let's go downtown and find out just how bad it is. Phillip Statler's on the line from Statler Financial Services, and, well, we officially hit bear market territory for the Dow yesterday, Phillip, and it ain't going to get better today, is it?
No, it's not. And actually, the futures have put the S&P 500 in the bear territory also.
Well,
So,
gee.
you know,
I
it
mean, we
is.
don't even have any good news. We were kidding around before we went on the air. I said I've got a list of losers and one winner today. Whoops, take it back. Sambra Energy is actually breaking even, but the one winner that I had on my list a few minutes ago, pre-trading up by 1.5%, Rollins Incorporated. They're a pest control company, which means the world expects cockroaches and termites to survive the coronavirus, and not too terribly much else if you believe the Wall Street futures.
Yeah, it is definitely heading south again today. As a matter of fact, the futures circuit breaker already got hit this morning, and they halted futures trading. So it is going to be a rough day. I'm sure it's going to end up being a rough week at the rate we're going. But I was having a conversation last night at church with a younger gentleman who said, man, he's looking at me and said, I looked at my 401k this morning. I shouldn't have done that. But I said, hey, but look, Friday's coming. You're going to add to that account. And look, you're buying it cheap. You know, your age group should be excited and should be putting more money in because, hey, as soon as they figure out how to solve this problem, the markets are going to bounce back up and you're going to be in good shape.
And they're probably, if history is any indicator, they're going to bounce back fast, too. So, yeah, the 35 and 40-year-olds that are doing the proper planning, dollar cost averaging right now, this is one step shy of heaven if you're on the young side, because you know darn good and well at least a portion of this, even if we do enter bear market territory, a portion of this is going to recover and make what you're buying today look dirtbag cheap.
Yeah, and you're right. When this thing does recover, it could bounce really quick, and so if you're not there, you're going to miss that that upward movement in the marketplace.
Yeah, it always needs to be clarified. When you and I talk about exit strategies and stabilizing a retirement fund, the target people that really need to be, flying around the room backwards are the ones that are like 10 years away from retirement and less, or those that have just retired and have a little too much exposure. The ones that are in their 30s and 40s right now, the guys that are trying to sell stock are absolutely right. This is a buying signal right now for the young'uns.
Absolutely. And you're right. Those people that are in that danger zone, they're the ones that need to be concerned right now. And that's that 10 years prior to their retirement age and really and truly 5 to 10 years after retirement. Because anything that happens in the market could be detrimental to their income planning. And so that's where it really starts to play. And there's in between people, right, Dave? There's that mid 40 to mid 50. What do they need to be doing? Well, their portfolio should be a little less risky than the 20 and 30-year-old, right? So they should be kind of that middle ground where they've got a good part of their portfolio in equities, a good part of their portfolio in bonds, and they need to have a decent mixture there. But those people heading into that danger zone definitely need to be pulling in and being more guarded.
Absolutely. The strategy changes depending upon your age is the bottom line. Bringing everybody up to date, yesterday was ugly to the max yesterday. Dow lost 1,465 points, down 5.8%. And as mentioned, it's now officially in bear market territory. NASDAQ's down by 4.7% yesterday. Standard & Poor's down 4.9%. And then the president went on TV last night and said, okay, look, first thing we're going to do is we're going to impose a travel ban from all the countries that have issues with coronavirus right now. And that was regarded as a good enough idea where even the governor of California said it was a good idea. And when a Democrat says President Trump is doing the right thing, you just know it's going to get a reaction. And yeah, the future's kind of responded by heading southward even faster than they were after the close yesterday.
Yeah, and maybe we should be asking ourselves, was that the right decision? If the governor of California thinks it's a good decision, maybe it wasn't.
Yeah, anytime you get a Democrat and a Republican to agree from two different wings of their parties, you kind of go, oh, geez, the world is about to end. That obviously is having a really bad impact on all the energy stocks and on all the travel stocks. I got Apache, one of the big oil drilling companies, down 19% pre-marketed. And then I start getting the Norwegian Cruise Lines, Delta Airlines, Royal Caribbean Cruise Lines. I mean, they're all tanking this morning, and it kind of gets it up to the point. They're all tanking because basically we're telling people not to use them. But boy, if you're 30 years old and you're looking at buying some stocks, Norwegian Cruise Lines could be a real bargain right now, couldn't it?
Yeah, it could. Carnival just announced that their Princess line is going to stop global ship operations for 60 days. So that's a big announcement for them coming out. So yeah, it is. And you got, you got the NBA suspending their season for further notice.
They canceled the Friday afternoon race at the 12 Hours weekend, not the 12 Hours of Sebring, rumor control people, but the folks at the WEC, they got their equipment here, but their drivers are all stranded over in countries they can't fly here from. So they said screw it and canceled the Friday afternoon race here at the Super Sebring weekend. So some of this junk is heading home.
Yeah, it is, and that one definitely is hitting home to us. And so, what's the other thing? So now the March Madness, right? College basketball, we can't go watch them. We have to watch on TV. There's going to be no fans in the stands. That's going to be just weird, Dave.
That's just going to be surreal watching those games. NBA said to heck with it. They just shut down after some idiot with the Oklahoma City team patted a whole bunch of reporters' cameras and then came up tested positive for the virus. They said, heck with it, we're going to shut this place down. The world is going to be a weird place for the next few weeks. That's for darn sure.
It is. But folks, remember, this is all being fear-driven. And what's it going to take to reverse all of this? Well, it's going to take finding a cure or it just running its course and it be over. So, that's the deal. And so there's a lot of fear out there. If your portfolio is balanced properly, you should be able to weather that storm and come out the other side and be in good shape once this market starts to recover.
Understood. Couple of things came out of the government data dump department this morning, which isn't going to affect the market a bit, but we always report it, so we'll do it. First-time jobless claims, pleasant surprise. We aren't laying people off yet. Only 211,000 first-time jobless claims last week, and that, I gather, was a pleasant surprise, huh?
It was. They expected 218,000. So not a big surprise, but still anything that's a surprise when it comes to employment right now, given the situation we're in, I think is a good thing.
Absolutely. The other thing were the producer price inflation numbers. You said it was a miss. I didn't get a chance to ask which direction, but last month producer price index down 0.6%, and that was off of the price of energy. When we get to the numbers this morning, that's not going to be hard to see, is it?
No, it won't be. They expected to go down. They expected to go down, but only by 0.1%.
That was the core number. So once you factor energy out, we're pretty much close to being on target there as well, right?
Yeah, the core was expected to go up 0.1%, and I've not seen what the core number actually was.
Down 0.1. I saw that part.
Okay,
A little,
so
little bit of a miss, but again, inflation relatively well under control, which once again backs up something we've been saying. The economy has been functioning perfectly fine. We're fear-driven, right?
we are fear driven, but there's kind of this caveat too, Dave, is that as we continue to close venues down, that's going and quarantine people and do all the things and keep people from coming over here. Those things within themselves are going to have an economic impact on everybody here in the United States.
Absolutely. We aren't through this thing as far as the rough ride on the economy. And right now we're dodging bullets and we can only cross our fingers. To give you an idea as to how much the fear factor is actually affecting the market, you had one winner and one loser on the quarterly reports. And of course, they're both losing on price this morning, I gather.
They are. We had Dollar General, which is popping up everywhere, right? Their main competition seems to be the convenience stores right now, and I think they're probably winning. Um, they beat by 9 cents a share. Revenue also beat forecast, and you know one of the things they look at for them is their same store sales, and they were up 3.2%, which was better than the 2.8 they expected. So and they raised their dividends. So look, they ran the table and won on all four sides.
So
But
they should be kicking butt this morning, right?
they should be, but they're down 2.3%. Yeah.
Story of a life. Then when you lose a little bit, the other reports you got pretty much tells you how bad it can get, right?
Yeah. Then you got Party City, and you know Party City's had issues for a while now. Um, they missed earnings by 30 cents, almost 30 cents a share. Revenue missed. Same store sales fell 5.1% compared to 4.9 they were expected to lose. They're just not in good shape all the way around. Not that they were trading anyway. I mean, they closed yesterday at $1.05 a share,
Okay.
but they're down 33% this morning, down to 70 cents a share. That'll be a new 52-week low for them.
A bad report followed by a bad day is not a good combination, right?
No, it's definitely not. So they will have lost over 50% in 2 days.
Oh, Lordy. Well, as mentioned, it was a tanking yesterday. We had President Trump saying probably decent public policy, but certainly not good for the market last night. I guess we need to give them the bad news 45 minutes before real money gets thrown around. Where are we going and how fast are we going there, Phillip?
Well, we're trying to compete with yesterday. Right now, the Dow is down 5.25%. That's $1,233. S&P 500 is down 140 points, a little over 5%. Nasdaq's down 403 points, right at 5%. So we're going to see a big decline at the open, and so we could even see the circuit breaker hit because if it drops 7%, they halt trading for 15 minutes, and so we'll have to keep an eye on that and see what happens when the market opens at 9:30. And this morning, we look at everything else. Gold and silver are both trading down. Silver is taking a significant hit this morning. It's down 4%, down to 16, right at $16 an ounce. Gold is down 1.8%. Crude oil is getting hammered today, down 6.5% to $30.80 a barrel.
That is amazing. I noticed the 10-year Treasury bonds off 6 basis points just since I checked out this morning. We're down to 0.69% for the yield on a 10-year Treasury bill, which is utterly amazing to me. Foreign markets pretty much going the same way we are. Japan and Hong Kong both off big time at the close early this morning. European markets is saying, oh my God, we can't run to the United States anymore. So they're all down between 5 and 7% as well this morning. Phillip, this is one of those times, and we were talking about it at the beginning. If you're young, it's a different strategy from if you're old. And if you're in the middle, there's a strategy that's between the two. That takes a pro for advice. How do I find you to get that advice?
Give us a call at 863-382-0037. Follow our website, statlerfinancial.com. Join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings. Folks, don't let fear drive you. Know the facts. Get an idea of how much risk you have in your portfolio. Give us a call, and let's do a financial x-ray.
All righty. Real good idea right now in these weird times. Phillip, thank you, and we'll catch you in the morning, all right?
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, I know there's a lot of fear out there. We're here for you. If you have any concerns, any questions, any things you'd like to talk about, hey, give us a call, 863-382-0037. Love to chat with you, see if there's anything we can do to help you. But listen, folks, it's important that you know how much risk you have in your current portfolio, and that starts with a financial x-ray. Let's do it now. It's never too late. 863-382-0037. Hey, until tomorrow, have a great day, and I look forward to it.